The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Now, in fact, I could have picked a number of stocks that have been affected today, given their exposure to the US. We came up with Breville, but I mean, we're also looking at heavy falls from Ansell, Cedar, Fisher and Paykel, Treasury Wine, CSL. There's also uncertainty there too, of course, as to how long these are likely to be in place for, particularly as far as pharmaceuticals, whether we're going to see more on that front as well. But they are companies that rely heavily on sales in North America, posting those major losses that may force retailers to push up their prices. Countries that manufacture goods in countries hit with major tariffs or whose sales largely stem from the US already warning of price adjustments, they might fail to hit earnings targets. Now, Breville Group, currently off by some 6%, pairing earlier losses was down at 10% at the opening there. It has already announced mitigation strategies, including moving around 80% of its production out of China by the end of the calendar year. Now, of course, China now facing tariffs of 54%. Initially, 20%. Donald Trump throwing another 34% on top of that. So, as I said, could have picked a number of stocks here. Howard, how do you, when you look at Breville, perhaps what it needs to do, what it's doing at the moment, how are you viewing it?
Yeah, well, Breville had really gone up in price an enormous amount. Its PE was quite high, so it was there was good reason why it should drop. I actually own Breville and think it's a great company, but it had got very pricey. But although they're moving most of their production out of China, much of where they're moving it to has also had big tariffs slapped on it, because one of the places they'd moved a lot of their production to was Vietnam. So it also got a whole lot of extra tariffs added on it. But in the end, it'll be the American consumer who'll either decide not to buy a new coffee machine, or alternatively, they'll pay more for a coffee machine. So, you know, if you beat your own citizens over the head enough, they either won't buy things or they'll pay more for things they buy. But yes, it will probably hurt Breville's earnings to some extent. But you know, all this lovely theory of they'll make everything in America, well, if you're going to make everything in America, where are you going to get the workers from if at the same time you're kicking out a whole lot of people who were working in America?
Well, also the time. I mean, if you're setting up a factory from scratch, it's going to take years to establish.
And where'd you get the workers? You know, it's a bit like our Made in Australia policy. Sounds wonderful, makes beautiful TV ads, but we can't have both high wages and a big manufacturing economy. We can have high wages, which is the better of the two, but then we can't be a big manufacturer. And the US is now kicking out, or claiming they're going to kick out a couple of million people. Well, where are the workers going to come from?
So what would you do with Breville?
I'm very happy to hang on to them.
Yep.
I was happy to hang on to them even when the price was higher, because it's an exceptionally well-run company. And the US isn't the only market. You know, they're selling all over the world. The US is just one of many of the markets that they sell in. So, look, I think it'll be a bit of a hassle for them for a while. Probably mean their earnings won't grow as quickly as they could have grown. But I'm sure in the long term it'll be a well-run company as it is today.
Yeah, double hold. A hold for me as well. We don't cover it, but looking at the company itself, it's an exceptionally run company. They've got massive market share in Australia. They have a very well-known brand and brand name, not only in Australia but globally now. So massive US market there that accounted for a lot of their record earnings in the first half that we saw posted by Breville. But what we're looking at is obviously they're going to have to pass the cost on, as I mentioned earlier. Any company that doesn't pass the cost on is going to get seriously hurt on an earnings front, but also on a cost front, and also from investors selling out. So any company who doesn't pass the cost on, I'm not sure why you wouldn't, but that's up to them, and I wouldn't see any company that doesn't pass it on. So Breville will look likely to pass it on. We'll see a bit of strategy shift by all companies with exposure to the US in the coming months. So yeah, I would definitely hold on right now. They got low debt, a strong balance sheet. As Howard said, that it's not the only market for them. They're not solely US providers. So they've got opportunities elsewhere, whether they target Europe even more now or somewhere else. But I think it's a very well-run company, so I don't see it being too hurt by America, but they will have to strategize around it. So a hold rating just to see what's going to unfold.
Yeah, the only companies, I suppose, that won't pass on price increases are the ones that can't, because there's a US competitor making a product that's very similar.
Exactly.
But all of the companies that doesn't apply will just pass it on, and the US consumer will pay more.
Yeah, unless it's a race to the bottom, as you said.
All right. Yeah, well, in fact, I think that's certainly a concern of the likes of Treasury Wine at the moment, just in terms of the wine it's selling into the States. That is our stock of the day, Breville.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.